What's up, everybody? This is the Gore Report checking in. I missed you guys last week, but we're back at it, so let's get to it. Now, let's circle back to last week on earnings and, of course, a surprising shift in monetary policy announced by Jerome Powell at Jackson Hole on Friday. Target and Walmart reported last week. Now, this is a tale of two different worlds for the two major retailers. Walmart had a mixed report. The discount retailer missed on analyst earnings but beat on revenue. Now, anyone who knows me knows I stress the difference between revenue and earnings. Revenue is more important than earnings because revenue is your revenue. You can't legally manipulate revenue. However, you can legally manipulate earnings by way of cost reductions or less spending on research and development. Now, despite an earnings miss, Walmart raised full-year forward guidance. The positive forward outlook was based on Walmart's strong e-commerce growth and investments in AI. Target, on the other hand, not so good. Listen, Target's got a lot going on. Target reported a decline in revenue year over year. Now, they did beat on revised lowered earnings, but the sentiment overall was negative. What caused this? Obviously, a decline in non-essential customer spending. It's no secret consumers are pulling back on spending. The main difference, and everyone knows this, the main difference between Target and Walmart is Target is looked on as a luxury retailer in comparison to Walmart. So they have higher prices. That's not good in an economy environment like this. Walmart can thrive in a world where consumers are spending less. This is the same exact way McDonald's is still doing well. Companies like McDonald's and Walmart, they do well when the economy is a bit slow. Now, the bad news for Target didn't stop there. Target CEO Brian Cornell will be stepping down early next year as the retailer deals with declining sales and a customer boycott due to rolling back DEI initiatives. Target's got a lot going on right now, and they will need to figure it out quickly. Them bringing in a new CEO gives them time. It will buy them time for shareholders to be a little bit patient with them. So Target's got a lot going on, and so they'll have to figure it out. Now, moving on to the most important events of last week, the annual Jackson Hole presentation. Jackson Hole is an annual State of the Union for the economy that happens every year in late August and is conducted by the current time Fed chairman. Now, let me start off by saying I was wrong. I for sure thought that Jerome Powell would stick to inflation and give a very hawkish speech, but he didn't. The reason why he didn't is because of what happened on August 1st. That was when the labor report was reported and we had a very sluggish jobs report. I think that changed everything. If you recall, on July 30th, we had the Fed meeting in which they chose to leave rates unchanged. Now, that turned out to be a case where inflation was looked on as being more of a concern than the economy breaking down. But then August 1st happened, and then those numbers came out. And so I think if those job numbers came out before the Fed decision day, then there's no doubt about it that they would have cut. They definitely would have cut. So this is a change in stance. And so what we're looking at in September, we're more than likely going to see a 25 basis cut. Now, the key thing is what's going to happen after September 17th? Will we get another cut in October, or will there be a wait and see approach and then we get another cut in December? But we're definitely going to get another cut after September. So what's on tap for this coming week? The most important company in the universe, the big dog, NVIDIA, reports on Wednesday. Now, there are a couple of things to focus on. The all-important data center revenue guidance, basically the AI data center revenue guidance. Now, I want you guys to think back to when NVIDIA's main competitor, AMD, and I wrote a article about this in my newsletter, Gore Report. AMD had a decline year over year in data center revenue. That is not good. NVIDIA cannot afford to have a decline in data center revenue because this stock market is relying heavily on NVIDIA doing well. And that's just the case of it all. This market is relying heavily on Nvidia doing well because they are the big dog. All the hyperscalers are buying up their chips. So it's very important that not only earnings are reported well, but also the guidance going forward. A second part that investors will need to pay attention to, the China business ramp up. The Trump administration has granted Nvidia and other chip makers to sell AI chips to China if they give 15% of their China revenue, not earnings, revenue to the U.S. government. Now, this is what I would call, pretty much a pay for play. The Trump administration is utilizing leverage. Then they're saying, hey, if you want to deal with China, sell chips to China, you'll have to give us some money. And I think that's fair for both sides. We'll see if it goes through. So investors will want to hear more color on that situation. I can't stress the importance of Nvidia's earnings. It's really, really key to the stock market. Now, on economic news front for this week, on Friday, PCE will be reported. Producer consumption expenditure tracks the prices of goods and services purchased by households in the U.S. Now, we should expect the July PCE number to come in cooler than the June number because remember, July CPI came in cooler than expected. So PCE more than likely will reflect that. The PCE is another key gauge of inflation for the Fed to look at. Right now, Monday futures markets are indicating a lower opening with the Dow down around 60 points, S&P futures down 8 points, and the tech-heavy NASDAQ down 27 points. So basically, all three are down about 0.1%. That's it. That's all for now. The Gore Report checking out. Have a great work week.